What's up, guys? Welcome back to DCA. Tonight what we're going to do is take a look at a group of long-term investors who have been selling a large number of coins over the last few days. And we're going to look at this historically and ask if it's important. So what we're seeing is a place where a lot of individuals who have been holding for greater than 1 year, so 1 year, in fact, up to 10 years, have been selling some coins in this range where we're sitting at, anywhere from around 40,000 all the way down to this $32,000 level. So we're going to take a look at that tonight and ask ourselves, what is the significance? Is it a bad sign for the market going forward? And how should we react to it? So this chart that we're looking at is called the spent output age bands for Bitcoin. Now, what this does is it basically tells us we have all of these time periods. So 1 hour, 1 hour up to 24 hours, 1 day up to a week, etc. And this goes all the way up to longer term time frames. We aren't going to look at the short-term holders right now. We are going to take a look at the long-term holders. In fact, we're even going to exclude these 6-month to 12-month holders, okay? Because in general, these guys, the people that have been holding for 6 to 12 months, many of them, as we showed yesterday, are holding at prices that are actually much higher than we're at right now, because a lot of people bought the asset up in this 50,000, the high 40, all the way up to 69K level. So we showed yesterday that the market is very top heavy at the moment. In fact, if we just take a look at that again here quickly, what this is showing the $50,000 level. Okay, so this is $50,000 and we're looking at the price here. And this is the number of coins held at each level. And we showed in the video yesterday how there are approximately 20 to 25% of the entire Bitcoin supply is held around this $46,000 level up to the $69,000 level. So the market is very top heavy. All right. So, just to quickly reiterate how this works, we see at every given level is a $1,000 price change. So 45,000, 46, 47, 48, 49, etc., up to 50. And then, that goes all the way up. And on this axis here, as you come out farther, you have 0 coins, 100,000 coins, 200,000 coins, etc., up to 500,000 coins. And we can basically see how many coins are held at every single level. And what we've noticed over the last few weeks is that the number of coins held in this 30 up to $45,000 level has been increasing. So currently there's anywhere between 13 up to 15% of the total supply is held at this level. But above us is a much larger quantity of the total supply. All right, so we have this top heavy market right now, and that's the entire point of what we're talking about. You have a lot of these people that have held anywhere from 6 to 12 months. So recall back in January, we started hitting this $40,000 level. And then, once we got into February, so these would be the 1-year holders at this point, these guys were, anyone who bought up here is holding at a price that's higher than where we're at right now. The people who bought in February are going to contribute to these individuals, all right, as long as they didn't sell. So you have a large number of holders who own the coin above a $45,000 price level. All right. And that's why the other day we hit $45,000 and immediately got rejected off that level, because you have such a large number of holders right here who were just happy to get out at a break-even level. All right. So back to the chart then. So what we've seen in the last few days is a large number of individuals who have had the asset for 1 to 2 years, 2 to 3 years, et cetera, all the way up to 10 years. They have sold the asset in these last few days. So right once we started to get into the, a level at around $40,000, so $42,000 to $43,000, these individuals started taking profit. Now we can actually look at this, get a higher resolution picture to see exactly who these were. So they weren't the individuals holding the asset at, for 10 years. You can see that actually some of these guys did take some profit, but they did it, when we were coming down the first time. All right. So when you're looking at a number here, you're looking at a percentage of the total number of coins that fall into that category. All right. So for instance, where we have a big spike here, that was 0.02% of all the coins that were held at 10 years or greater. All right. So very, very early coins being sold right here. All right. And, this individual, whoever this is, it's probably, maybe a small group of individuals have coins that are this old. They're just slowly selling the coins, throughout the entire bull market. And think about it from their perspective. They don't really care. They're sitting on literally whatever they're selling at is just pure profit. They basically just have coins that are, if we just go back 10 years, back to 2012 at this point, back to here, at most the coin is $5 or $6. So, their cost is $5 or $6 and their profit is anywhere between 32,000 up to 69,000. So when you're talking about that level of profit, it's all just money in the bank. Those guys aren't the ones creating the selling. The 7 to 10 year guys, these guys have been just taking profit throughout the entire thing, just small amounts throughout the entire market cycle, right? Because again, they're kind of in the same situation. And you see these guys are always selling a small amount. And why wouldn't you? You're sitting on just massive levels of profit. So they just, right when the price starts going up, they just start taking a little bit of profit. They're not the ones doing it really. So the next group are the 5 to 7 year holders. So these guys fall anywhere between coins that are sitting or, that were purchased February of 2017 all the way back to February of 2015. All right. So these guys are also at a huge profit because, the earliest that you would have had these is sitting at around a $1,000 price. So again, they aren't the ones who were rushing to sell right here. And in fact, if we just zoom in to this area, you see that they in fact took a decent amount of profit. In fact, selling almost 1% of all coins that were 5 to 7 years old right here at this 46K level. So that sort of precipitated into this bigger drop that we saw down to 32K. Okay, so the next group is your 3 to 5 year holders. So these are going to be individuals who have held the asset from anywhere from February of 2019 all the way back to February of 2017. So let's take a look at how they have reacted to this market. Well, they've been selling a decent amount throughout the entire length of the market cycle, but notice where these individuals have sold, and they've done this now in 2 separate instances. Right here, after we had our giant drop in May, we went all the way down to 29K. Okay, so this is important in my opinion. We went all the way down to 29K, and then we got our first true break of the downtrend, where we went from 29K all the way up to 41K. The second that the market started to correct, they spooked and wanted to make sure that they locked in profits. So we saw at this time approximately right here, 8% of all coins that were in that age group were sold right here. They obviously held some, and then what happened? We went on another rally, and then they spooked again as soon as we had another significant correction. Okay, so we saw another almost 8% of all of the coins sold when we had the second correction. And we've seen the same exact thing right here. We have went from 69K all the way down to 32K. And then these guys who have coins that are 3 to 5 years old, they sold right here at around 44K, right? Notice where they were selling this time. They were selling between this 41 up to around 45K. So they're sort of selling in the identical location where they were last time. So we went down to 32 or 29K, came up, got in between that 41 up to 47K level. And these 3 to 5 year holders took a large amount of profits at that time because they're not certain of the fact that the market will continue. They have uncertainty just like retail investors do. So they approach that uncertainty by making sure that they can lock in profits at a place that they're still obtaining a decent return, because now we're in the range where some of these guys may be holding coins anywhere from 10K up to 20K. So it becomes a question of how much return are you willing to accept? Are you willing to risk the fact that the market heads back down to something like 20K, which we've showed in many videos is possible, regardless of how much people don't like to hear it? If things went awry, we could go back to 20K. It's not likely, but it's a possibility. All right. So let's just keep going then. So the next group we'll look at is the 2 to 3 year holders. So these now are guys who have the coin from 2020 back to 2019. All right. So some of these guys now have coins that they've been holding ever since right about here, ever since this place where we were at around $3,600. In fact, if you go look at some of the on-chain metrics, a lot of these coins that were purchased back at this level have never moved. So you still have a lot of coins that were last move at this level, and they're still sitting there. So that's something to consider, and something that we may have to face going forward. You have a large number of coins that were purchased down at this $3,400 level that have yet to move. But now, what have you seen? We basically saw about 5% of all of these coins that are anywhere between 2020, February of 2020. So, we're talking right before the COVID capitulation event. So maybe right here, up at 10,000, all the way down to 3,500. Okay, so let's see how these individuals have reacted throughout this market cycle. Now, this is why I'm asking the question, how much does it actually matter that these individuals are selling? And you have to recall, it's not like they're dumping every coin that they have. They're just dumping some of them. They want to make sure they're locking in some profits. Because if you look here, just because these longer term holders are quote unquote the smart money, it doesn't mean that they know where the market cycle is going to terminate at. Because if you look here, we saw these same individuals sell a lot of coins right here at 34K, right before the bottom. So that's clearly not, the wisest thing to do, to be selling when you're down here. But you have to remember, they're sitting on a large profit. So when we're in these different ranges, and especially when we're in a downtrend, they, like I said, have uncertainty just like you and I. So their uncertainty leads them to desire to lock in profits as we're moving down. So they would prefer to make sure that they're going to lock in at their highest rate possible, given all the facts that they have. And they know that there's market uncertainty at the moment. They know that we're in a general downtrend. It's entirely reasonable to be taking a small amount of profits if you're sitting on the type of gains that these individuals are. And then finally, the 1 to 2 year holders, right about here, 46K up. So that's why we saw this big bounce off when we did, because right when we hit 45K, then you're getting into your 1 to 2 year holder group, and these guys have been holding at a loss for going on, a year now. Now, with that said, a lot of them are holding anywhere all the way back to just before COVID. So you do have a lot of individuals holding from around 10K all the way through, 20, 30K. Well, there's not a lot of 20 or 30K holders, but basically you have a lot of individuals holding the asset anywhere from 8K up to around 20K. So that's sort of the distribution of individuals who have the asset. And this level where we're seeing people taking profits now It's entirely expected. It happens every single time you have a relief rally in the setting of a downtrend. Individuals who have been holding for significant periods of time will take some profits in a relief rally. Now, you almost cannot find a single instance where we have had a relief rally and not had these individuals start to take some profits. In fact, if you really look, maybe right here. So in May of 2018, you didn't have a lot of profit taking on the relief rally. It wasn't until actually we started to go down again that these individuals started to take profit. But notice one other thing. These long-term holders also capitulated when we dropped from this level at around 6,300 here all the way down to 3,700. A lot of these long-term holders capitulated right here because it's like I said, they don't know where the bottom is, just like you and I don't know where the bottom is. It's all just a large degree of uncertainty. It's just the fact that the long-term holders are more likely to create the downtrends where the bottoms occur because they have the asset at a much lower price than anyone who's bought more recently in general. So therefore they have many more coins. What we're saying is, we're seeing a lot of selling right here, but I think the significance of it is being overstated. I think, we've seen that these individuals will take profit every single time there's a relief rally. And it's just natural because they want to lock in profits before prices potentially go lower. Even if prices go higher, that's fine. They have more coins in reserve. They'll just sell those when we go higher. So it's just it's a way for them to make sure that they're locking profits in at current prices, and that especially some of the newer holders, it's a way for them to make sure that they don't go into these lower levels. And as we've shown, it's not being caused by individuals holding from 5 years plus. It's a lot of it's your 2 to 3 and 3 to 5 year guys just locking in profits like they've done every single time that we've had an uptrend into a downtrend. I mean, look at your 3 to 5 year guys in the last market cycle. They dumped a huge number of coins once we got down to the market cycle bottom. So just because they're doing that doesn't mean that they're right, is the bottom line. It's obviously not going to be your most bullish sign. I'm not going to sit here and try and spin it like that, but it's also not the end of the world. So that's it for this one, guys. If you guys like this type of content, hit like and subscribe. You could head over to the Discord channel to sign up for the DCA Index Risk Model. This is a risk model that I've developed which helps you identify where market cycle peaks and bottoms occur. We could look at it right here. It's color coded by the risk dimension, and when it's blue, that means very low risk and typically good times to be buying the asset. You can see we got to that level in July of 2021, and then in January, late January and February of 2022, and we started to hit our market cycle peak. While it ended up not being our actual peak, it was our retail peak, occurred in February through April of 2021. So you could head over to the Discord channel and sign up for that there. It's a free model. Send it out to you in a few days. And that's it for this one, guys. Until next time, as usual, see you.